Hi, everybody. I hope you're doing well. Today, we're going to cover the weekly QQQs for October 26, 2020. So, what's the net? So, let's talk about last week quickly, and we'll cover some points of that later in the slides as well. So, our projection was it was flat to less than a 2.5% increase. The actual, it decreased about 1.2%. Monday was the day it decreased the most, and through the remainder of the week, it went up by about half a percentage point. But it's kind of what we expected. A lot of volatility right now with earnings week, and that volatility is just going to continue into this week. We don't have a specific projection for this week. We do feel that it's going to be up at the beginning of the week and down at the ending of the week. And this has to do with the announcements this week. For earnings, there's going to be a lot of earnings announcements. Some of them are going to be really good. Some of them are not going to be that good based upon our own analysis and projections. So the things that are happening this week, it's earnings week. I think it's generally going to be pretty good for the QQQ. Over 50% of them are announcing this week. The biggies: Amazon, Apple, Google, Facebook, also the QQQ can announce this week, like Twitter. So earnings week, Q3 for some of them will probably be rough, but it looks like for the big ones or the big players in the QQQ, like the Amazons, the Apples, etc., it looks like they're really ramping up for Q4. So they should have good Q4s, and probably we'll talk about part of their earnings. The drag of external factors: stimulus, election, COVID are the main. Certainly COVID is highest cases. Looks like it's going to take an impact, especially on the non-QQQs. So, the Jets ETF or the airlines. But that general drag may impact the QQQ. The other is stimulus. Stimulus last week on Monday, which made it go down. The lack of stimulus is going to continue this week. I think folks are really believing stimulus is never going to happen prior to elections. And then obviously elections are coming. It's a tight race, so that will have an impact on where things are going to go as well. The other reasonings aren't as dramatic. 5.5% near the all-time high for the QQQ, so it's up there. There's not a whole lot of room to grow, especially with all these external factors, which is why we think it's going to be volatile. It'll go up and go down probably this week. Over the last 30 days, there's a 45% drop in stock volume. This is primarily for the QQQ in its entirety. The FANG, or we call the FANG Plus, the volume have started to increase, and probably in conjunction to earnings this week. Long-term option volume is shifting to puts, which is for option traders, up or down, doesn't really matter to us. Looks like there's a momentum shift that's occurring to puts. I would be cautious of applying that to every company, though. Again, the FANG Pluses look like they're ramping for Q4, and the volume is starting to shift in that direction for the FANG Pluses. Let's get into the earnings. So last week, we talked about Tesla and Netflix. We're correct on both of those. We felt that Tesla was just going to nail it, and they did. And Netflix missed, and that's what we projected as well, that they were going to just have a rough quarter. Tesla should have shot through the roof, but with external factors, COVID, election, and stimulus, it got dragged down. Also, I think the general market analysts feel that it's probably a little bit overpriced. But expect that Tesla, they're growing gangbusters, and their future projections look very good. So I would expect that they just continue on going up. This week is a lot of earnings. So Microsoft, Amgen, Apple, those three make up over 20% of the total QQQ fund, and they're all announcing in the beginning of the week. I think Microsoft, Amgen, and Amazon are going to hit it. Amgen looks a little questionable. However, momentum-wise, there's a lot of volume on Amgen in terms of calls, and we'll talk about that in the next slide. Apple, Comcast, Facebook, Google on the 20th, as well as Amazon. A lot of volume going against Apple, so that's why it's a red. We also feel from our own projections that Apple is a red as well. Comcast, we'll talk about Facebook. Facebook is at a near all-time high. It looks like from our own projections and analysis, they're pulling back a bit. So I'd wonder what their Q4 is going to look like, especially if we're in another COVID type area. Google has pulled back a little bit as well. And so we'll see what happens with them. So these folks make up roughly 25% of the total triple Q fund. So these combined, compared against Microsoft, Amgen, and Amazon, they may offset each other. Or if one of Microsoft, Amgen, or Amazon miss for some reason, you should expect that the triple Qs is going to be problematic, to say the least, for next week. Twitter, I included Twitter in here as well because it's a non-FANG, but certainly impacts kind of the perception of high tech in general. They're rocking. They're doing very well. They have setting up for future growth. So certainly, although they're at an all-time high, I probably don't have a lot of room left in it, but they are looking very good in terms of growth. Charter Communication won't talk too much. They're kind of in between and probably not very good forward projections. So let's talk about volume. Amgen and Comcast have the most unusual volume that we have found for companies that we're predicting on. Amgen call April 2021 expiration at the $345 strike price. It's pretty reasonable. It's a $75 contract cost, and it's at 266 average day volume, which is up from what they're normally at. Amgen, we recommend generally. They look like they're pretty good. This just ties into it. I mean, they look good for Q3 and going to Q4, but Amgen, you never really know. So plus it's earnings, so just, be cautious with it. Comcast, a lot of folks betting against them. Probably has a lot to do with kind of the Netflix numbers and other things. But it's April 2021 expiration at the $32.50 strike price at an $80 medium contract cost, which is pretty reasonable, and above normal average daily volume, so 364. So those are the two that have unusually high volume. Ties together kind of what our projections are for them as well. So unusual volume. So let's get into some of the drags, dragging or lifting on the triple Qs. All these are kind of drags. 50% plus announcing earnings in the next 30 days. Not a huge drag. That's why it's color coded a little bit differently. If the ones we expect to hit, it should be kind of flat. If like a Microsoft or an Amazon, which are expected to do well, miss for some reason, that would certainly be a problem for the triple Q. I think Google and a few others are kind of already questionable by the analysts. So if they have some issues, I don't think it's going to impact as much. But generally, we expect that earnings should be kind of middle of the road in terms of impact to the pricing around it. Elections in 2 weeks, increase in COVID-19, and the stimulus has stalled. Those are definitely drags on it. And we saw that drag happen last Monday when stimulus stalled out, and now we're at an all-time high for COVID cases. So invest wisely. There's some macro items causing it to drag. So be cautious. Let's get into some of these details. So the 30-day stock price. I mean, the net of this is it's pretty much flat, right, over the last 30 days. If you look at the non-FANG, flat. If you look at the FANG, slight increase. But pretty much flat for the last 30 days. For option traders, not great. But expect this week is going to be a make or break week for the triple Q. 30-day predicted stock price. So this is our own projections. So we're seeing an uplift in the FANG Plus. It went down coming out of September, kind of leveled off, and now is looking at a forward projection over the next 30 to 90 days. It certainly has a lot to do with our Q4 growth projections from them based on what we're analyzing through our big data AI platform. On the non-FANG Plus, flat, pretty much flat. 30-day stock volume, kind of tied together with this. Non-FANG, volume is continuing to decline. On the FANG Plus, volume is starting to uptick. Again, we kind of think it's related to coming into quarterly earnings announcements and people starting to play volume on it. If we look at the 30-day option volume, so where the things are heading, again, puts versus calls, puts are starting to have more volume, although calls are starting to, after their decline, starting to level off and starting to up a bit. So it's pretty middle. It might be at an inflection point where calls start to happen again. It's forward projections, but realistically, with the macro events and items, I think people are going to be pretty level right between puts and calls, and not a lot of movement either way. And this is reflected in our 30-day predictions for calls versus puts. It's pretty much leveled off, right? So not a lot of movement one way or the other. We're projecting more puts than calls. Certainly those puts are related to some of the ones I've already mentioned that are announcing next week. But again, generally, Q4 growth for almost all the ones that we talked about are looking very good. Year-to-date call predictions, we're seeing for historical norms, we're seeing an uptick in calls and starting to see a slight decline in puts, which is good. Hopefully the economy is going to do well through the elections and through the macro events, but just again, be cautious. Certainly the market's at some form of inflection point with all the events that are occurring. So invest wisely and invest cautiously. Don't do anything based on gut or feeling. Look at the data, do the analysis, and then make an educated decision, or as best educated as you can from there. So this covers the QQQ for the week of October 26th. We'll talk quickly about our analysis. We track 94% of the fund. We've made 9,500 predictions year to date, and we only talk about companies that have an 80% or higher accuracy in the data that we show. So these are the ones that we track for the last several years where we've been able to accurately predict price and company performance with an 80% accuracy. So that's all we talk about as part of our analysis. We only cover US and European companies only. Outside of that, data becomes a little bit questionable, so we don't include them within that. Typically, our predictions have a 1 to 90-day time horizon, and we primarily predict forward-looking performance of the companies we track. We don't look at stock as the primary driver. We look at it as a secondary stock pricing, option pricing, and volume related to that. And an overview of the QQQ. If you don't know what it is, there will be some details within the description, but it really mirrors the NASDAQ 100 index fund. It's performed exceptionally well going through COVID, and the future, we should see that this fund still continue to do well. However, it's highly weighted towards few companies. Again, 15% of the companies account for 65% of the fund. So if those companies miss, which are announcing this week, you'll see a dramatic impact to the price, even if all 85 other companies did extremely well. So just be aware that the Amazons, the Apples, the Facebooks, the Googles of the world drive the QQQ, and it's really not 100 companies. It's really 15, probably more like 10 that make up the majority of what occurs within the QQQ. So look at them, not try to track all 100 of these companies. Again, thank you for your time. We hope you have a great week of trading. We're always open for questions, so if you need anything, please reach out to us, and happy to help in any way. Happy trading.